Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are looking at the top 7 best stocks to buy right now ahead of the next big interest rate increase or the next big interest rate hike. So we're going to look at 7 companies that could actually benefit from the rising interest rate environment and actually perform very well despite the increasing interest rates and the out of control inflation. For more videos like this one, remember to go and smash that like button right now, comment your favorite company down below that you think will benefit from the interest rate hikes as well as overall inflation. Subscribe if you are new, and without further ado, let's jump right into today's stories. Also, I want to mention that we'll be going over what these companies do, their latest quarter 2 results, as well as price targets among professionals, which we should take with a grain of salt. We should only use these price targets, price forecasts, and price predictions by experts, professionals, and analysts as a guideline of what the company could be, because there is no guarantee that these price targets are going to turn out. I also want to mention that all of these companies have a different risk to reward ratio attached to them, so you should always make sure to do your own research to ensure that these companies are good for your personal portfolio, depending on what investing strategy or how much risk you are comfortable with. But without further ado, let's talk about Albemarle, ticker symbol ALB, which currently trades for $263 per share, while professionals believe the company is worth anywhere between $145 on the low end and $440 on the high end. If you didn't know, this company is the largest lithium producer in the entire world. They had a fantastic quarter 2 regarding their financial results because this lithium giant actually reported an increase in revenue of 91% year over year to $1.48 billion. They also have a strong balance sheet with cash and cash equivalents totaling around $930.6 million. Their lithium segment in particular benefited the most from this growth, and that's what contributed to their overall revenue soaring because of electric vehicles and the EV space ever increasing. Their particular segment for lithium, which the majority of electric vehicle companies use some type of lithium in their batteries, has caused various lithium producers to have an increase in their respected revenues, and particularly this lithium giant achieved a growth in this segment of 178% year over year, which is absolutely crazy. Now, with that being said, we can't anticipate these high revenue growth rates forever, but right now the company is absolutely primed for growth because the electric vehicle market is absolutely doing phenomenal right now. Because of this large market for electric vehicles, the management of this company has actually raised and increased their 2022 full year guidance 3 different times, to where now they believe the company is going to bring in anywhere between $7.1 billion to $7.5 billion. Right now, the company trades at around a 14.2 times forward earnings multiple and only a 7.7 times their sales multiple. This is why analysts believe and give this company a 12-month median stock price forecast of $300 per share, while the company currently trades at $263. The next company we're going to talk about is one of my favorite companies, and that is Bank of America, ticker symbol BAC, ticker name BAC, which currently trades for $32 per share. Analysts believe this company is worth anywhere between $34 and $55. I also want to mention that this is a fantastic company to own because it has very stable growth rates, and with this company being a finance company, rising interest rates will actually benefit this company, and we will talk about that more in this video. Bank of America, if you didn't know, is the second largest bank in the United States with more than $2 trillion worth of assets under their management. They offer consumer banking, wealth management, investment management, and global banking services. The company brought in very stable quarter 2 financials where their revenue increased around 6% year over year to $22.7 billion. Bank of America in particular is extremely sensitive to changes in interest rates, and this is actually a good thing because as interest rates rise, the company can actually bring in more net interest income, which currently has increased by around 22% year over year to $12.4 billion as of quarter 2. And if we have another 1% increase in interest rates, this will cause Bank of America's net interest income to jump by around $5 billion over the next year. So far in 2022, the BAC stock is down around 24.5%, making it one of the best companies to buy on weakness right now. It currently offers their investors a strong dividend yield of 2.6%, and the company also has a fantastic book value because it's a bank at only 1.3 9.1 times, while their forward earnings comes in at 10.7 times, which makes this company a great value. Analysts believe this company is worth on average around $42 per share, which is higher than the current stock price of $32, so feel free to look into Bank of America. The next company that I do like is Charles Schwab, ticker symbol SCHW, which trades for $70 per share right now, while experts believe the company is worth $73 at minimum and $100 at maximum. This company is the largest brokerage firm in the United States, which offers asset management, banking services, and many other things. Their client assets exceed $8 trillion according to data from 2021. This company also had very good financials that came in quarter two, and according to the results, their revenue soared by 13% year over year to $5.1 billion, which was primarily driven by a 31% increase in net interest income. Just like Bank of America and many other banking institutions, or really any institutions that get to adjust their own interest rates to a certain degree, their net interest income is going to surge as interest rates continue to rise. The company also added around 1 million new accounts during the quarter, which would represent a 5% year-over-year growth rate. The company is currently down and trading at a discount of around 16% year to date, and this is going to be one of the better stocks to buy on its most recent dip. The company also offers a decent dividend yield of 1.2% to its investors, and its shares currently trade at 18.4 times forward earnings and 4 times their book value. Professionals currently forecast that the company should be worth around $86.50 over the next 12 months, which again is higher than the current stock price of $70. And as interest rates continue to increase, this is just going to help out Charles Schwab and other financial institutions that get to adjust their interest rates. The next company we're going to talk about is Cme Group, ticker symbol CME, which trades for $198 per share, while stock experts believe the company is worth anywhere between $168 and $270. If you didn't know, Cme Group is the largest derivatives exchange in the United States, and they brought in fantastic quarter two results. The company is also very fundamentally strong. According to these results, the company reported revenues of $1.24 billion, which is a substantial increase from a year ago for the same quarter, where they brought in $1.18 billion. And this company also is well known for its interest rate products, so a rising interest rate environment is actually going to be positive for this particular company. The company also gives their investors a decent dividend yield of 2%. The company also has pulled back recently by around 14% this year, at least year to date, and they're trading at around 24.9 times forward earnings and 2.5 times their book value. Experts in this particular field believe that the 12-month price target for this company should be around $216, which, to no surprise, is above the current stock price of only $198. The next company we're going to look at is Equinix, ticker symbol EQIX, which trades for $629 per share, while stock gurus believe this company is currently undervalued right now because it doesn't even fit in its current ranges of price predictions and price targets among professionals, which gives us a range between $647 up to $1,000. This company is one of the largest data center real estate investment trusts on the market, and they are doing very well because according to their quarter two results, their revenue increased by around 10% year over year to $1.8 billion for the quarter, which would mean that this REIT has increased their overall quarterly revenue growth for 78 quarters in a row. This implies robust demand for this overall company and the various services and products that they give consumers. The market sell-off recently, particularly negatively impacting growth in technology stocks, has caused the EQIX stock to fall by around 22% year to date. The company also offers a good dividend yield of 1.9%, and according to stock professionals, they believe the company is worth over the next year around $805, which is currently way above their current stock price of $629 per share. The next company we're going to talk talk about is Marathon Petroleum, ticker symbol MPC, which trades for $98 per share, while stock experts, professionals, and analysts believe the company is worth $108 on the low bearish end and $135 on the bullish high end. This company, if you didn't know, refines, produces, transports, and sells petroleum products to a plethora of various companies. The company ranks as the third largest crude oil refining company that is located stateside, and they have a throughput of around 3.1 million barrels per day. The company also had a huge surge by around 82% in regards to the revenue, according to their Q2 financials year over year, where they brought in $54.2 billion. This refinery continues to benefit from increased fuel prices that has been caused by inflation, and it makes it one of the best stocks to buy right now, especially if you want to hedge against inflation or a rising interest rate economy. The MPC stock price has surged by around 57% year to date, and its shares are only trading at around 5.4 times forward earnings and 0.4 times their sales, which makes this a fantastic buying opportunity if you want to hold this company for the next year. Because the current stock price prediction, price forecast, as well as price target is $120, and the current stock price is only $98. So again, this could be a really good buying opportunity. And then the last company we're going to talk about is T-Mobile US, ticker symbol TMUS, which trades for $142 per share, and of course stock professionals believe the company is worth $128 or $214 depending on what analyst, professional, advisor, stock reporter, or expert that you talk to. T-Mobile is one of the leading business-to-consumer wireless communications service providers, and it currently holds third place in the United States. According to their Q2 financial results, revenues for this company grew by around 6% year over year to $15.3 million. It's no surprise that T-Mobile is spending a load of money to become the leader in 5G, and right now, according to current metrics and data, they are doing that. They are on their way to becoming a leader in 5G coverage, so overall this could be a very strong stock to buy. T-Mobile stock is currently up around 24% year to date because of all of this 5G FOMO that's in the market, and it is technically one of the better telecommunication stocks to buy right now. However, I do want to tell you that this company has a 59 forward earnings multiple and a 2.3 times sales multiple, which could make it really risky depending on what ratios that you value more. But currently the price forecast, price target, and price prediction among analysts, or a median price target, price prediction, or forecast for this company comes in at around $169, which again is above the current share price of $142. So if you want more videos like this, or you want more of my thoughts about these particular companies down below, remember to go and smash that like button, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.